You sly dog! You got me monologuing! I can't believe it!
Welcome to a special edition of Contrarian Corner and the first episode of You Got Me Monologuing. So that was a little clip there from The Incredibles, which is one of the old favorites from Disney before they went to shit. But that's a separate discussion, separate rabbit hole for sure. But yeah, I thought I would just kind of come on, improvise, and talk about some of the stuff going on with different things in the portfolio. Try out a little bit of a different format, see if you guys like it. So yeah, let's jump right into it. I wanted to start with Calumet, which has been on an interesting ride over the last month and change. So kind of talked about this a little bit, but they had the C-corp conversion, which was right in here. That is one of the ultimate buy the rumor, sell the news type charts if you're a short-term trader. But in the last couple of weeks, it's been basically straight back to where it was. So we'll kind of see what happens. But I think someone knows something as far as the odds of a DOE loan coming soon. So they do have a appearance at a sustainable aviation fuel expo here in 3 weeks, give or take. And like others have said, I kind of doubt they'd be presenting there if they didn't have the DOE loan. So I'd put pretty decent odds that we'll see something by September, but kind of have to wait and see what happens. So I don't think that's a buy the rumor, sell the news type event again. And I think when shares get going, I think we could see some pretty interesting stuff. But some people have been calling for $50 or $60. That seems maybe a little bit aggressive, but the market does weird things all the time. So definitely a possibility. Still on a small slice of the January 20 strikes. And there's part of me wants to throw a couple $100 at the January 35 strikes, but not going to make any changes for now. But after their C-corp conversion, you don't have to worry about the K1 if you do decide to buy shares. So there's that. But yeah, I think this will be one to watch between now and the end of the year. If they do get the DOE loan, then that's a game changer for what the company looks like over the next, call it, couple of years. But I think that's a near-term catalyst I think is worth keeping an eye on. So next, we're going to move into some talk about Borr Drilling. They reported earnings last week, and there's a lot to like. And I know I kind of talk about this one all the time, but I think it's one of the most compelling opportunities in offshore, especially just for the regular common shares. So when I first wrote about Borr, I think last October, I kind of was talking about, okay, they're going to have to refinance. There's probably going to be capital returns. The new build should be basically delivered by end of 2024, early 2025. And pretty much all that's happened. So they got the refinancing done. They actually just added another $150 million to basically pay for some of the acquisition activation costs for one of the new builds. The other new build should be, I think, getting delivered in November, December. And then from there, it's just a matter of getting them contracted. So if you told me a year ago that we'd still be chopping between $6 and $7 as the balance sheet got better, like you're getting a 6% dividend now, getting paid to wait. And the new builds are, one's already delivered, the other one's going to be delivered within a couple months, then I would have been surprised to see stock price where it is. But I think that's kind of where the opportunity is. So starting to sound like a broken record, but I've said before, I think the capital returns that we've seen so far in 24 are going to look like a drop in the bucket compared to what 2025 might be like, 2026 and all that. So I think there's still a lot of legs. I think we're still pretty early innings in the offshore cycle. I was listening to the most recent earnings call, and they highlighted how old a good chunk of the jackup fleet is. So right now, you've basically got 30% of the rigs being over 35 years old. And that's kind of pretty stark contrast with Borr Drilling's fleet, which is, I think the oldest rig they have is like 11, 11 or 12 years, and average age is like 6 or 7 years. So they have a long way to go before they get to be that old. And I think if you kind of look at what they've been able to do with day rates, while there has been some weakness in certain parts, like the Saudi Arabia releasing certain rigs, like it's been interesting to see how their contracting is held up compared to other players in the sector. But when you have one of the rigs get released and the stock get nuked from orbit, and then 7 months later it gets signed for contract in Brazil for like a day rate increase of like 60%, that's a pretty good sign that things are heading in the right direction. So we'll kind of see where that one goes. But they're basically almost all contract for 24, 73% contract for 2025. And I'll kind of show my favorite Borr chart here to display kind of that we're going to see something similar to what Tidewater's done, where every quarter you see revenue up and to the right, and operating income, earnings, all that has been kind of on the same trajectory. And it's going to be interesting to watch when you kind of really see that inflection, and it's starting to happen. So when you add in 2 new builds that should be active by early part of 25, I think that pattern's only going to continue. So we'll kind of see how it goes. But if you use kind of the same rough back of the napkin math as far as valuing the company based on replacement costs, like I did with C-corp in my post the other day, basically comes out to roughly 45% if you assume a new build jackup's going to cost you $300 million. But when you think about, okay, where do day rates have to go to start seeing new builds? How long does that take? What is it actually going to cost to have new builds when, like, if we're doing new builds in 2028, for example, I don't think they're going to be able to build them for $300 million. So there's going to be some cost inflation in there. You kind of have to look at what the shipyards are busy doing, whether it's LNG ships or all that stuff. But I still think we have a long way to go. And I think they're basically, if you look over what they've been doing, they've been levering up into a bull cycle, and they'll have plenty of cash to send back to shareholders or pay down debt once everything's humming along and the new builds are in operation. So I don't think this stock stays in the single digits for a whole lot longer, but we'll see if it takes like another dividend hike or them starting buybacks or what it is that kind of starts to drive the stock. But it's way too cheap right now, in my opinion. So I want to jump next to Valaris and some of the stuff that they have going on with their fleet. So talked about a little bit in my post a couple weeks ago, but the thing that's interesting with them is they caught a bunch of shit for their contracting in recent years, and now their whole fleet is basically, or a good chunk of their fleet is set to roll as far as the contracts. So if you look between call now and the end of 2025, you've got a whole bunch of, like, you got 1 rig, 2, 3, 4, 5, 6, 7 of the rigs basically set to roll as far as getting new contracts. And I don't think you're going to see day rates be as mediocre as they were on the past contracts. So I think that inflection is coming quickly for Valaris, but it's kind of just a story of poor timing on reporting earnings. Like, I think they were up 6% or something on the morning of their report, and then that turned out to be a day where everything got nuked for 3 straight days. So I think it went from 83 to like low 60s in basically a week. So I think it's a decent chance to buy the dip, honestly. I was adding some of the warrants, but I expect the results will get a lot better moving forward. So I think that's a pretty interesting one to look at. I guess the other thing that's happened since my last post is worth mentioning is more insider buying with Transocean, 2 million shares, which is nothing to sneeze at. But I think it's just kind of worth noting if you have insiders that know just as much as anybody, if not more, about the company, and they're buying shares in size. I think that's a pretty interesting signpost. So we'll kind of see how it plays out. But I think it's a pretty interesting time to be looking at some of the offshore names. So one of the last things that I wanted to touch on was some of the stuff going on with Peabody, which I think is starting to get pretty interesting again. They no longer have to worry about Elliott selling a whole bunch of shares, so they're finally out. So that overhang's gone. I think they reload the buyback. I think they added, I think it was 100 million to that. So we'll see kind of how that develops over the next couple quarters. But I think Peabody in the low 20s is pretty interesting setup, especially compared to some of the other coal stocks, which have been pretty weak. And Peabody's kind of just been chopping sideways like it has been for, I don't know, 2 years now, year and a half at least. But that's one I think is worth a closer look right now, but we'll kind of see how that develops. So last thing I wanted to touch on was a piece here from HFI Research. I think it's pretty interesting. I've kind of talked a little about the Permian, and this is kind of my semi-educated watching from the cheap seats as far as talking about how many barrels the U.S. is going to produce and all those things. But there's a lot of good resources out there to follow. If you guys aren't already following HFI, should definitely go sign up, at least be a free subscriber. But they kind of point out that we might not be getting growth from U.S. oil production moving forward. So I think it's something worth watching. I've kind of said, just as kind of big picture 3 to 5 year time frame, that I'd be surprised if we're in 2025 and 2026 and we're still talking about the Permian growing and shale continuing to grow and all that. So if you look at demand numbers, supply numbers, there's a lot of noise in the data. Some people think it's completely cooked. It's interesting to watch. I don't have too much to say on that, other than I think there's going to be some interesting times ahead for the energy sector, and I think there's decent chance that we move potentially much higher. But that's I just don't see like the scenario where we're going to go to $30, $40, $50 a barrel like I've heard some people calling for, because we're going to get some giant recession and it's going to be the end of the world and all that. But at the same time, you kind of have oil positioning being extremely bearish. So that's if I remember right, I think I saw something that said basically lowest record low positioning going back like 20 years. So generally that's a good time to be buying oil or buying energy names. I don't directly buy futures or anything like that, but I think it's kind of the paper market tail wagging the physical market dog. So it'll be interesting to watch. From everything I've seen, it seems like demand's held up pretty well, and we'll kind of see where it goes. But definitely something worth keeping an eye on as far as oil markets. I'll be dropping a podcast with Vince Lanchi tomorrow that'll give some more insight on that. He's a veteran trader and definitely worth following over on his Substack over at Goldfix. But just a couple things to keep an eye out for. Wanted to experiment with a new format, get a quick update out on some of the companies in the portfolio, some of the things that I'm watching, and kind of maybe point readers in a couple directions that might be interesting as far as companies starting to inflect or catalysts coming in the next couple months, depending on the company. So with that, I think we'll be wrapping up. Thanks for stopping by, and we'll see you next time.